What's up, traders, my fellow hunters? That is what Venator trading is. We are hunting trades together. So, good morning, good afternoon, good night, depending on where you are watching this. Hope your day is either starting out well or ending well or going well. All right. So, we are on day 2 of our 10k to max funding challenge. And yesterday kind of broke down for you some of the rules and stuff. I'm going to see if I can put those back up there. Maybe. It's not working. Thought I could do that. Anyway, here is what our max funding challenge currently sits at. You can see up here on the screen, this was the trade that we got into yesterday after CPI. I had an alert set if it got to here to go to break even. And you can see, I'm going to go back down to the 15-minute time frame. I put in this alert right here at 8:45-ish yesterday morning after the CPI move. Wanted price to come back down into the top of this box right here is the top of the 4-hour order block, a bearish order block or bullish order block. So I wanted price to come back in here, respect it, and move up. And this is what happened. So price came in, almost wicked us in on this candle. It wicked us in at 9:30, and we got in, and then price started rallying really hard. Actually went back up just over 1-to-1. Took out the highs, took out the highs here from the CPI news, and then rejected pretty hard. Came back to break even. I do not move to break even until we're at 1.5 R, which means price has to move 1.5 times what my stop loss will be until I move to break even. And then I just let the trade play out. It's either going to hit my take profit, it's going to hit my stop loss, or it will give me an opportunity to move to break even. And it did not do either of those. Wandered around down here. I thought, around yesterday afternoon, I had just resigned myself. This was going to be an L. And it is what it is. You're going to take losses, so you're not going to win every trade. Thought it was a good setup. It met my criteria, and it did not respect bullish order flow. And price did come back up, got us back into entry, and then overnight, around 10 p.m. my time here, we got back up. We made a pretty good run, and then it just fell overnight, and then when London opened, it just collapsed. So took an L here. It's fine, no big deal. Here's what that means for us today. It means there will be no trade entries today because my rules state that I can only take a 2% loss per day. And even though I entered the trade yesterday, the trade did not complete until London today, which means that loss occurred today on Thursday. And I started on Wednesday. So technically, I'm down. Well, I am not technically. I'm really down 2% on this funded account. One trade, I risk 2% per trade on this 10K account. And took a 2% loss on this day. So I can't take any more trades on this account today. Now, I still have other challenges I'm working on with other funded accounts I'm working on. So I'm still going to do some analysis here and call out moves as I see them or as I think they will play out. And then we'll just spend some time here hunting some good setups. So we work on euro dollar, we'll look at pound, we'll look at gold, we'll look at US30, maybe look at Bitcoin a little bit. And then of course the dollar just to see how the analysis might correlate with all of those pairs. So, how do I feel about this? I don't know if a loss ever feels good, but I don't feel bad. Neutral, maybe. So again, if you have a system that you know has a 50% win rate over the course of time, you're going to be profitable if you have a 1 to 2 risk reward ratio and a 50% profit. So I'm not really worried about this. This is one trade. It's one flip of the coin, so to speak. Every trade outcome is going to be random. Now, your edge is that you know your system produces a certain amount of winners. And my win rate is just above 50%. So I know when I enter a trade, there's going to be a lot of times that I take a loss, and that's okay. But when I play it out over time and I take a setup every time it matches my criteria, just like a casino, I'm going to become profitable by the end. So that's where we're at. That's what's happening. And I don't really feel anything good or bad about this trade. It just is what it was. I think traders get really all up in their, they mess themselves up. They start thinking like, you know, right here, let's just go back. Let's just play this out, replay this whole thing. And I'll just tell you how a lot of people go about thinking through the emotions of a trade. So we had CPI data yesterday on this euro dollar. It rallied hard after the news, and then we started having a pullback. I want to buy low and I want to sell high. So I want to buy when price is at a discount, and I want to sell when price is at a premium. So price moved up, created a premium, and I was waiting, and it created a order block on the 4-hour time frame. So my theory, my trading strategy is basically built around ICT's way of trading. And so call it smart money concepts, whatever you want to call it. But order blocks, breaker blocks, imbalances, fair value gaps, those are the things that I use, and I keep it simple. If you're familiar at all with ICT, he's the GOAT, no doubt about it. But the caveat to that is that it's so dense. There is so much to learn, and there are so many tools and concepts and language and just so much going on in what he teaches that most of his students get so confused, and it takes them forever to figure out exactly how they want to trade ICT stuff. And they try to incorporate every single thing: INWOGs, INDOGs, FVGs, consequent encroachment, OTEs, order blocks, breaker blocks, fair value gaps, SIBIs, BISIs. I mean, it just goes on and on and on. And he is constantly teaching and adding to his concepts. Now, if you go back and you only watched his 2022 YouTube mentorship, and that's the only thing that you used was a run on liquidity above an old high or low, a displacement in the opposite direction of the run that created a fair value gap with a change of market structure, and then entered as price retraced into that fair value gap, targeting some type of PD array on the downside. That's a simple system. And so anyway, I say all that to say, I've taken what I've learned and back tested from my CT, and this is what I use to trade. It's very simple. I keep it very simple. I don't want my trading to be complicated. I don't want it to sit here and have to look at the charts and stare at all these lines and all these abbreviations. I just want to be able to look at a clean chart, mark my level, wait for price to get there, enter, and target where I want it to go. So that's how I trade. As if you stick around here and watch, you're going to see this play out over and over again. Order blocks, breaker blocks, fair value gaps. That's what I use. Those three things. It can be all three of them. It could be one of the three. It could be two of the three. But that's what I use. And for this specific challenge, I'm doing a 1-to-2 risk reward ratio. So I'm going only to target 1-to-2, dead even. That's it. I have on my other challenges and funded accounts, I don't do a 1-to-2. I will target specific areas on the chart for my profit targets. It's usually more than 1-to-2. So yeah, but for this challenge, to help new traders try to get funded on a small 10K account, and then use that account to grow their assets under management and eventually become max funded with one account, one prop firm. That will allow them to leave their day job. And that's the whole goal. Ditch the day job. No one wants to be making money for somebody else and have their future completely in the hands and their security in the hands of some other company, some other business, some other person. We need to provide for ourselves. It's built into our human nature. The 9-to-5, I mean, one of the biggest lies we've been sold. Go get your 9-to-5, work 40 hours a week, and scrape by. And I think we're all tired of that, and that's why everybody's on TikTok and Instagram and the interwebs looking for side hustles that they can do and use to get out of it all and just cut loose. And trading to me is amazing. It's the best way. It has the highest income potential of any side hustle that I can think of. And you're in complete control. It's dependent completely on you. You don't need another customer to show up. You don't have something to sell. You don't have inventory. All you have is you, your computer, or your phone, in your head. That's it. And you push buttons, and you take trades, and you get paid. Now, it's like golf. It's a simple game to learn, and it's incredibly difficult to master. So hopefully this YouTube live stream will help some people in the mastery part of it, and just teach you some concepts, follow along, hopefully deal with a lot of psychology, because quite honestly, trading is probably 85% strategy and execution and 15% mental. When you start getting into this, and I'm going to play out this trade that we took yesterday, and we took a loss on it. After almost 24 hours, we took a loss. And I'm going to play out what most people do and freak out about. So, called out the trade on Twitter. Let me see when that was, just so you guys know. I think there's a way to post this on TradingView. Let me go down here. Can I, if I just drag How do you, anybody know how to put tweets on TradingView? Let me Google this real quick. How to add tweets to trading. In the drawing panel, go to the annotation tools menu and select tweet or idea. In the pop-up window, paste the link to the tweet or idea and click the OK button. The tweet or idea will appear on your chart and be placed on the timeline according to the exact time it was posted. Okay, annotation tool. What the hell's the annotation tool on Twitter? Let me okay, there's the tweet, so I can copy and paste that. Now I just need to find the annotation tool. Not any of these. Text. Tweet. Hey, look, right there. I can start, add it to my favorites. Now it's right here. Cool. Okay, tweet, insert link. Okay. Bam. There it is. So 8:50 a.m. is when I called that out. But man, why is that so? How do we make that? Can we make that smaller? Okay, yeah, there. So it'll draw a line over there. Cool. So you can see I called, here's my tweet right here, set my limit, risk 2%. I put in everything, the entry, the stop loss, the take profit, and a picture of the chart. 8:50 a.m. right here at the high of this swing. And I wanted price to come back down into these fair value gaps. And it ended up coming down into just this lower fair value gap right there. And then my expectation is that this is going to support price, not in the classic support and resistance way. This is true support and resistance, not like, oh, there was a lot of volume here. It's not how we're doing this. Okay, so wanted price to come in and then take off, and I was targeting 1 to 2, which is up into this section. Let me get into a higher time frame here and move this over. These highs into this fair value gap right here. I did think it was going to make a run on Monday's high, but I'm sorry, yeah, Monday's high up here. I thought it was going to do that, and it may still do that. We have news today and tomorrow, so we'll see. But that's what I thought. But this is just 1 to 2. So here's how I framed this trade: was this down candle would be supported. If I'm right, price will not come below this 4-hour bearish candle, which is creating a bullish order block. We had a down candle, we had a big up candle, and I was expecting price to come back down into the wick in the body and then create bullish order flow and move higher. That's how I saw this playing out. So at 9:15, we get in, 9:30, somewhere around there. I tweeted all this. You can, at Venator Trading, you can follow along all my tweets with this challenge as I update any trades that I've taken or are about to take that I don't take on the live stream here. So price came in. I was like, okay, cool. You can see my order block. It respected it. I mean, basically to the pip here, and it started to pull back. Okay. Now we're going to move ahead. These are 15-minute candles. So it's like, oh, cool. Price is moving back in my direction. Shocker. This is how I expect price to move. And I had an alert set, like I said, up here. You can see my risk reward ratio is 1 to 2. It's a little bit over 2 only because there's commissions in spread. So just to a true 1 to 2, you have to go just a little bit above your 2.0. That's where I had it set. So a lot of people at this point would be like, yes, oh, let's move our price way up here. Man, we're gonna reduce our risk. We're into profit, and you know, this is going great. Then it starts respecting and rejecting off of this swing high. Oh no, what's price gonna do? This is so bad. Oh gosh, maybe I should move my stop back down to where it was, because now it's coming back, and maybe it'll still go up, but or maybe do I just close it out here and take $25 or whatever it was, 20 bucks? Ooh, 20 bucks. Oh, so let's go back. Let's replay this bar, because so you can watch this play out on a 5-minute time frame. All right, so we see this, it's coming down. We get this huge candle, and for these 5 minutes, oh my gosh, we feel amazing. Absolutely amazing. Look at this. We're over 1 to 1, which means we would be 2% in profit on the account on our first trade. And there's a lot of people that would probably just close it right there and just be like, 2%, I'm up 2%, I made 1 to 1. Okay, 1 to 1 is fine. But if all you have is a 50% win rate, you're not going to be profitable. You're going to be break even. You have to be above a 50% win rate on 1 to 1. And for most beginner traders, that is not, they can't sustain that. I didn't close it out. My rules are I need to be at 1.5 R before I move to break even. And so that means price needs to get up into here before I would move my stop to a risk-free trade. So this is where people lose their minds, because they see price. I'm gonna go back to the 15-minute. They see price, and then they see this massive rejection, and they're like, oh, rejection. Oh, dang it. I knew I should have gotten out when it was at 2%. I knew I should have done that. I'm such an idiot. Why do I suck so bad? And let's just keep playing. Oh no, we're back in a drawdown. God, why did I do that? This sucks. This is horrible. Price always does this to me. It goes in my direction and then immediately turns around. And so price is actually trying to hurt you. Price doesn't care about you. It doesn't even know you exist. These are demo accounts. This isn't even a live account. The market isn't looking at every demo account in the world. Paper trading. That's what you're doing on these challenges. You're paper trading. The market doesn't give a crap about your paper trade. It doesn't give a crap about your 0.7 lot trade on a funded account. It's nothing. That's a tiny little gnat. One little gnat in the entire world. That's what your trade is in the market. It doesn't care. It's seeking liquidity. That's all it's doing. It's looking for liquidity. So price comes back down. Oh man, halfway to our loss, our stop loss. Now we're down. We were down 2%. Oh my God, we were up 2%. Now we're down 2%. Up 2%, back to break even, and now down. And now it just starts to kind of float around a little bit. It gets us back up into break even. So, oh man, we should just close it out now. We don't know what's going to happen. We don't know. Oh, I knew I should have closed it out of break even. Oh, now I'm going to take a loss. Oh, I'm going to take a big loss. Oh, I'm going to be down. I'm sorry. This would be 1% because this is a 2% total. So I was up 1%. No, wait. Yeah, I was up 2%. Now I'm down 1%. Man, this sucks. I'm just going to take a loss. I'm going to try and deal with it. If I could get back to break even, just back to break even, then I'm going to be okay. Oh, my God, this thing is going to suck. Why did I do this? I was up 2% and now I'm down 0.5%. Okay, wait. Maybe it'll let me get back to break even. Oh, there was break even. Should I get... Oh, man, look at that. We've got displacement. We've had break of structure. Oh, man, maybe I should just hold it. Maybe if I just move my stop up here, I can reduce my risk. Maybe this thing's going to take off. Dadgummit, I knew I should have gotten out. Oh, wait, this thing's... Oh, here we go. Here we go. Daddy was right. Oh, my gosh, yes. We're making money. Not moving my stop. I'm going to follow my rules just like I said I was. Oh, yeah, look at this. Look at this. Look at this. We're back in profit. Oh, no, what's happening? And I'm in, you know, at some point. Oh, yes, look. Oh, I'm so glad I held on to this. I'm so glad. I know what I'm doing. I knew I shouldn't have moved my stop loss. Yes, we're doing great. All right, I'm going to go to bed, and we'll wake up in the morning, and we're going to be up 4% on this account. Go to bed. You wake up in the middle of the night to go to the bathroom, get some water. What the hell? Oh my God, I knew I should have taken profit here. I knew I should have gotten out of break even here. I should have taken some profits here and just gone to bed and maybe moved to break even. Instead, I took the L. One trade, one day on a 10K account. This is how traders just screw themselves up. It's sitting there watching it, let it play out, and they don't know how to handle it. Quite honestly, you can follow my tweets. I tweeted out as the trade was playing out, what was going on, what I was thinking, and I wasn't really thinking anything. I had an alert set for if price got to my break even point of 1.5, I would have moved it to break even. Now, I monitored it about once an hour. I would look at it and go, what's price doing? And then I would send you a screenshot on Twitter and tell you this is what price is doing, and I'm not doing anything. I'm just letting it do its thing. I made my analysis. I got in where I wanted. I put my stop where I wanted. If I'm wrong, I'm wrong. And I ended up being wrong. And it took way too long to play out. I don't like holding trades for almost 24 hours. But in this crappy ranging market that we're in right now, that's kind of what we live with. Which is why 1 to 2 right now is great, because until the market starts really trending, 1 to 2 is a great thing to aim for every time. Even when it's trending, it's great to aim for 1 to 2. You don't have to sit there and worry about it and manage trades. It's just a simple way to manage a trade system. All right, let's turn off the replay feature. We'll catch up to where we are. So this was a loss right here. I'm going to delete this tweet. It's cool to know I can do that now. Learn something new every day. All right, let's see. It is now 7:30. We're into the kill zone, ICT kill zones for Forex trading, which is 7 a.m. New York time to 10 a.m. New York time. I'm going to go ahead and take this off because I don't need this anymore. We're going to go back up to the 4-hour time frame. And here's my analysis from yesterday before CPI. I said we have a lot of liquidity down here that I think price may want to try to rip into. Ultimately, maybe targeting this high and this fair value gap here before we make a run on these highs and head up to this larger weekly volume imbalance. So you had CPI. It came back up into right here. Look at this. It came right back up into 50%, just over 50%. So it's in a discount. If you want to sell, you wait for price to get into a premium. So it came back up into a premium. It got right into this fair value gap, tapped into it, respected it, and dropped to target these relative equal lows down here. And yeah, that's what happened. That's how it did it. Let me put that back up one more time so you can see that. I thought I had a better. Oh, here we go. So price moved. Here's your swing, your most recent swing. We had a breaker structure, left a fair value gap up here. You're above 50%, so price moved back into a premium level, into a PD array, premium discount, or price delivery array. You could say it both ways. Moved into a premium, into a imbalance, fair value gap, whatever you want to call it. Respected it, dropped, targeting relative equal lows and sell side liquidity. So now we've grabbed sell side liquidity. There is still a little bit more down here, and there is this imbalance on the 4-hour time frame. Are we going to go that low? I don't know. So what we have also now is you have this high right here. That's a swing high. So either side of it, you had a lower high, a higher high, and then another lower high. So that's a swing. So that's a swing. That's a targeting liquidity above that. So you had price run above that and create a low, and now we have displacement. So this 4-hour candle was the last down candle before we took out liquidity and then moved lower. So this 4-hour candle, we're going to watch and wait and see if price respects this as a breaker block. Okay. I'm going to go ahead and take that off. I'm going to take that off. Notice this down here is the 4-hour imbalance from this over here. This was Tuesday, April 23rd when that formed during the London session. So there is still some liquidity that we haven't grabbed yet here, here, and here into this. So price may want to come back down. You have this bullish breaker right here. So this is the last down, bullish down candle right here. This blue candle. That is a breaker. So why is that a breaker? Well, you had a move up to run liquidity with displacement above. So it broke that. Once it breaks that order block, an order block becomes a breaker. You can see once it broke through, it came back, retested here and shot higher, retested it again, retested it again. That's support and resistance. Where did we stop? On this 4-hour candle and reject off of this 4-hour candle at the top of that breaker. So maybe this breaker is going to be the support that is going to send this back higher. But we're going to watch and we're going to wait. Again, I'm not taking any trades on this account today. I'm going to change the color of that so we can. So that's a 4-hour breaker. This kind of blue box and the orange box is the 4-hour imbalance here. But you can see just how much price has respected that breaker. After it grabbed that liquidity and ran, we've just been in this, since that happened, we've just been moving sideways in this choppy, disgusting range, engineering liquidity. So now that we've engineered liquidity, we've had a run on sell side liquidity. Is this going to be a stop run? Well, don't know. What we would need to see is this breaker to hold. Otherwise, we would be bearish on euro dollar. Now, if this holds, what will we see? Well, we would see price come up and create a higher high, come back down into an order block of some kind here, and then see price change market structure and move higher. And inside of that change, so we would want to see price come up and do this, do something like this, and then on this break of structure, you would want to see some type of fair value gap inside of here that you would then target, you know, something like that, and go 1 to 2, something like that, if we're going to be bullish. But we need to see displacement above oops, how do I just get rid of all that? We need to see some structure form up right here. We do have news in at 8:30, so we have about an hour, and we get some more month-over-month PPI. They're expecting a rise in that slightly, so I think if that comes in super hot, that's not going to be good for the dollar. If it comes in super low, I'm sorry, if it comes in super low, that won't be good for the dollar. So if it comes in under 0.3, I think you're going to see the dollar fall. If it comes in over 0.3, you might see the dollar strengthen and the euro continue to fall. Now, if the euro is going to continue to fall, where would we be targeting to see price continue to support bearish market structure? Well, on the 4-hour time frame, we would be looking to see, hey, where was the last down candle that then a move higher took place to grab liquidity and then broke structure down? It'd be right here. This 4-hour candle. We moved down so that we could move up to grab this liquidity into this fair value gap, into a premium of this leg. Then we moved lower. So we broke that structure. It did not, price did not support it. It tried to on this 8 hours right here. It tried to support price, and then it could not. Broke right through. So this becomes a 4-hour breaker. And on breakers, you know, you can get in right at the entry. You could target 50%. You could target just the wick to the body, like it's done here. You can see wick to body. Test, test. This one came down just inside the body and then reacted back to the top of that wick, top of the wick, top of the wick. So on this one, if you see price come up into this area right here, and it, you know, you feel confident that, oh, we're bearish now, that's where you would be looking to get short. You still have an hour and 20 minutes on this 4-hour candle to finish. So if it closes back up in here, leaves a fair value gap, that's your 2022 model. It grabbed liquidity, you had displacement down. This becomes a fair value gap, and you would expect prices to come lower. Now, because we have a 4-hour breaker that has supported price multiple times, I don't know that I would be super bearish. And just because of the way I still feel that price is going to want to come run into this weekly volume imbalance, I'm still bullish right now. I'm going to need to see more information and more data and watch price print to change my bearish dollar sentiment overall. It doesn't mean that you can't short euro. I don't recommend trading against your bias, but if you see a trade opportunity set up and it fits, you should take it. Just like the casino, if you don't participate in every setup, your edge diminishes. The casino participates in every single gambling event because they have such a small margin. They know over the course of time, they're going to be profitable. And if you don't do that as a trader, you're not going to be profitable if you skip out on good setups. If it's a setup, meet your criteria, you should take it. So you could short. I don't trade against my bias, but if I was looking at price to run lower, then I would expect price to maybe come up into this breaker, this volume imbalance, and you have this bullish order block right here. Right here. So you have a breaker, you have a bullish order block, and you got three of the three of my system if you're looking to go short. And I'm not saying do that, and I'm not saying I would do that. If I had the ability to take a trade today, I don't know that I would, because it's against my overall bias. We're still at the bottom of this range. We've come down here multiple times. We've come up here multiple times. We're back down here again. It's grabbed liquidity that has engineered. It has stalled at that breaker. We did not see a continuation. Now, if the next 4 hours you get a big continuation down, then this becomes an order block. It violates this PD array, this breaker block. It didn't respect bullish market structure. It's creating bearish market structure and respecting those, then maybe we change our bias. But today, this is how I see it. If price is going to continue down, this is where I would be looking for an entry. Either at this breaker, somewhere maybe 50% of this fair value gap. If we just move this over here, so 50% of the fair value gap is also in line with right around the body of that breaker. And then you could also be looking at targeting this order block right there, which is in the upper half of this fair value gap. All of those would be valid entries. So if you were short on euro dollar, you could go short right here. I'll probably put my stop right there. So you have a 33 pip stop there, and you have 1 to 2 down here, which would be closing in, ignoring that breaker and closing in and targeting these fair value gaps. Now, it's not a bad idea. You could also target 50% of the fair value gap. Let me tighten this up so you can see the trade options and how you could look at entries, and then target the top, and you go 1 to 2. It's a little bit less work to do. And then your final one, well, not even your final, just another option would be to target this order block, and you get in at the bottom of that wick. Put your stop above that breaker, and you're targeting 1 to 2. And then your final would be right here. And you can see the difference in how this plays out. This one, you know, it's doesn't have to come up very far to get you into an entry, but to have a protected stop just means you have to do more work on the downside. And there is a lot of PD arrays down here that would suggest price is going to have a hard time. It's already shown it's had a hard time getting through that. Doesn't mean it won't. This one, your next opportunity, again, it's got to dig really deep into sell side liquidity to hit your profit target into that fair value gap. Still could. This one, your third and fourth option. Your third option is into that bullish order block right there, which is about 50% of the breaker. Target, your stop is protected above the breaker and above this candle that created the fair value gap. And then your target is the top of that breaker, which price has gotten to before and respected. And so you could get a short. And then your final one is 50% of the wick of this order block, this bullish order block right here. And then protected above the breaker, above the fair value gap candle. And you don't even have to get that far down. So that's how you analyze, and if you're short biased, how you could set up a potential short play on the 4-hour time frame. Okay, good. We'll see if any of that plays out. I can tweet that out later today and watch and wait, but we'll see how price, what price does. You don't know. This is the beauty of trading, is you don't know, and it's fun to watch, analyze, and see how accurate your analysis is. All right. So that's euro dollar. So far, it didn't get back up into this fair value gap here, so maybe news pops you up into this breaker, 4-hour breaker section here, into this fair value gap, and then price respects and makes a run into here. Just watch and wait. Or we see price maybe come up, come down, support from this section here, and then we get displacement up. Then I would be looking for longs. Again, I would be looking for buys. That's my analysis. We have grabbed liquidity, taken out sell side liquidity under here. We have respected this 4-hour breaker, and now we're going to wait and see, is price going to have displacement up and give us an opportunity to go long, or is price going to respect bearish order flow and continue to come down into other and target other sell side liquidity and make a move lower? So what do you think? It's going to happen. All right, let's jump over to pound dollar. And I still have my analysis up from yesterday. So let's jump into that. Remember yesterday, this red line is the fair value. There's a fair value gap here. This is the top of that candle. That was that red line. Price is respecting this fair value gap 1-2 days. Okay, close above it, and then we had yesterday. So let's drop down, and I said this is CPI. I said price could either come down and grab this sell side liquidity. There's a bunch of sell side liquidity here. And price is going to take out these lows and dig into this imbalance. What did it do? It did not take out. It just ran straight up, tapped into this weekly imbalance fair value gap, and then immediately rejected came back down. We've now had a break of structure. It came back up into that order block right there and has since fallen away and continues to decline. So on the 4 hour, you've got this imbalance. What's that over here? Why did we put that there? Oh, this 1 hour imbalance here. So maybe price is going to come down. So look here. Where's your last down candle that took out highs and then broke structure? Right here. Breaker block. Came back up almost into it. Did not. You could say this one here as well, but you can see it better on the 1 hour. Beautiful 1 hour breaker. You had your last down candle, you had your move up, grab liquidity, broke through, left a fair value gap. So really these two 1 hour candles are your breaker, because they constitute one move down on a 2 hour time frame. Came down, grabbed liquidity, broke through with displacement, has grabbed sell side liquidity. We've had a move back up into about 50% of that breaker. You also have a move into this fair value gap. Almost completely filled in that fair value gap right there, and has now come back down. So price is currently supporting bearish market structure on the 1 hour time frame. And because price has dipped into this weekly volume imbalance, maybe that's all it needed. It needed to grab that liquidity so we can start making runs for these lows, and these lows down here, because you do have relative equal lows down here. So maybe price wants to do that. You're still in the range, and really until we, yeah, I would say until we get down below in here and hold this, I'm not going to be bearish. But you can see how the structure is respecting on the 1 hour time frame a shift in market structure and a respect of bearish price delivery. If it's going to remain bearish, we need to see some more displacement below this low, and then you could get into with a fair value gap, and then get into an entry somewhere here and target somewhere down in here. But again, I'm still overall bearish on the dollar. So right now the dollar is rallying, and you just have to wait and see what's going to happen there. Yeah, we've cleared out some of this retail. If you were retail and you saw a price respecting this trend line and you just got in here, you just got completely demolished. So that's why retail sucks. Don't trade retail. We use retail to show us where the liquidity is and where price will likely want to gravitate to before it moves in the opposite direction. So we've got price respecting this fair value gap on this hourly time frame. We still have another minute or so. We'll just watch and wait and see what's going to happen. Let's go and jump down to the dollar, and we'll talk through the dollar index. Where might we see this nasty amount of chop? When are we going to get out of this? When are we going to get out of this? This is so ugly. It just doesn't make any sense. So we've got relative equal lows. This red line is from way back. This relative equal low, this relative equal low, and we're inside a monthly volume imbalance. We have relative equal lows here and here on the weekly time frame. Okay, see that? 1, 2, 3 relative equal lows, 1, 2 relative equal lows in a volume imbalance. I'm expecting the dollar to come down to at least 50% of this and close in some of that monthly volume imbalance. Doesn't have to, it's what I'm expecting. That's why I'm bearish dollar. And because you're seeing a rally right now, does not mean we should change our opinion. What has happened? We have a daily volume imbalance right here. Today, we have gone up and wicked all the way up to the top of that volume imbalance, and currently we have fallen off. This is a 1 hour. I just know this because I put this on here a long time ago. I put this back in here. Prices respected, traded through, came back in, respected, wicked through, came back in. Not classic support and resistance, but call it whatever you want. That's how I see it. Anyway, we have now filled in this daily volume imbalance. We have traded to it and we have fallen away from it. So now on the 4 hour time frame, you can see right here, again, this is on the daily, this is that volume imbalance. We've traded up into it. We did have a break of market structure. We've left behind a fair value gap. Price is currently respecting this fair value gap. So it could push price back up into these levels, and then we will wait and see what happens there. So it could go and could make another little run higher here, and that's fine. If it does, I don't care. If it does, it does. We're just gonna watch and wait. But with everything going on around the world and inside the US economy, debt ceiling talks, all the things that are happening right now, the fundamentals, which I pay attention to, but I don't use them in my analysis. I want my analysis to line up and show me and validate my bias or invalidate my bias, and then I have to reassess. And so currently I'm bearish dollar. We're in a little bit of a pullback. Here's those relative equal lows down here, sell side liquidity here and sell side liquidity here. And that's where I think we're going to go before we make any significant move, run higher. But again, if you're looking on from a retail perspective, you've got this whole trend here, which we've already violated here, and we're violating again here. So old swing highs, that's where liquidity is. So you've got liquidity here, here, and then up in here. So maybe you do run up higher. I don't know. We're just going to watch and wait. On the 1 hour, you can see we've had a dip back into this big run up overnight. This dollar move up is what took me out of my trade on the euro dollar trade. And so, yeah, that's what happened. If we get some more bearish dollar order flow, come back down into here, we'll see what happens. It's grabbed this liquidity all up in here. It's gone into this volume imbalance. And now what's going to happen? Don't know. We're going to watch and wait. Got 50 seconds for this candle to close, and then we'll see what happens as the rest of the New York market comes online. And the New York Stock Exchange opens here in about 30 minutes. We have red folder news in 30 minutes. So we'll just wait and watch and talk you through it. So I'm still bearish. I still think it's going to come down here, but I don't know when that's going to happen. All right. So nature calls. So I am going to turn off my mic and my screen. I'm going to go do some business, see a man about a dog, and then I'll be back in just 1 minute. Let me see if I can figure this out. All right, we're back. All right, dollar has opened, and it's 8 o'clock. We are watching to see what's going to happen. Let's see what gold's doing. Choppy range, CPI, grab liquidity. We still have relative equal lows down here. Gold is moving a little bit higher in conjunction with a higher dollar, which is kind of odd because typically the dollar is moving higher, gold is going to move lower. If the dollar is moving lower, gold is going to move higher. And so these are now moving with each other in the same direction, which is a little odd. So, you know, whatever. I would stay away from gold right now. There's just you don't want to see gold and dollar moving concurrently with each other. You want to see them opposite of each other to get the best moves. So stay away from gold. Let's look at US30. Set this trade up last night. You had sell side liquidity here. It ran it and moved back up. You had a break of structure. Yeah, this is on the 1 hour time frame. I wanted price to see move back into a discount, into this fair value gap, into this order block, bearish order block, and I'm targeting relative equal highs up here. This is on another funded challenge that I'm doing with, I think it's the Funded Trader. This is a 100K account. So price has moved now and fallen back down into these fair value gaps. We'll see how this trade plays out. Yeah, just watch and wait. If price gets back up into this level, I'll probably move to break even. Again, I'm not using the same rules on this specific trade that I'm using on my 10K to max funding challenge. I can't take any more trades on that account today because the trade I took yesterday on euro dollar, I took a loss, but it did it after the new day. So today is when the loss happened, and I have a 2% daily loss limit. So I can't take any more trades on the 10K account today. So tomorrow will be the next opportunity, final opportunity for the week, to see if we get any setups for the 10K. But in the meantime, I'm just doing analysis and I'm showing you, I have other challenges going on, and this is one that I'm currently in. And I'm hopeful to see price respect this fair value gap right here. Go ahead and put that in. And we will get that to my fair value gap color scheme. And we'll clean that up a little bit tighter. Right there. So that's what I'm hoping price would do. See it run back up. This will, if price is going to win this trade, it's going to need to break through this 1 hour order block right here, because currently this is now we're still in this range right here, and we move back into a discount of this range, and I'm targeting these upper highs. I don't know if it's going to get there. I have been triggered into that trade on my 100K, the Funded Trader challenge, 100K challenge. So I'm in that trade. We'll see what happens. I don't know. You may lose. I don't care. Whatever. But for it to win, it's got to get through this bearish order flow. So bearish order flow means you have a move up to grab liquidity and then move down. And so we've had a break of structure. We've had displacement down. But I'm more looking at this full leg right here. We had CPI, ran it, come back in. I'm wanting this imbalance to support price moving higher. We'll see. On the 4-hour time frame, you can see price has grabbed liquidity right here. All of this liquidity, we had a break of structure. We came back up. We've yesterday traded back down in and filled in this big 4-hour fair value gap after this break of structure. Okay, that means these two up candles, these two bullish candles, are a breaker because you had a move up, an aggressive move down to clear out liquidity, and then you had a displacement back up above that swing level right there, creating displacement again. Price rallied, came back into, closed in yesterday with that news, closed in this fair value gap and respected it. We're now back inside that fair value gap. But now I'm taking into consideration that price went where it needed to go and moved back higher. We're still inside now this value gap inside this bigger fair value gap. So this is why I'm expecting higher prices on US30. You got relative equal highs up here and some fair value gaps. So I'm thinking price is going to run buy side liquidity. If it wants to go lower, I think it's going to come back up here and grab some of that before it does. So that's why that's how I framed this trade in this entry. A lot of people are like, man, limit orders work so well. You can get in at your price. You determine if price comes into this discount or to this premium. This is where I want to buy or sell, and it keeps you out of just randomly entering into trades at specific area or random areas. So I had said, based on my analysis, we had a run of liquidity, we had displacement, break of structure, we've filled in that fair value gap, and we now have buy side liquidity targets in sight. Price created a leg up, left some, moved back into a discount of this whole range. So now, because price, I want to buy low, I did. I could have bought lower into like 50% of that, and you can see it basically hit 50% of that, and it's moving up higher now. It just may reverse, and that's fine. It may take me out, and it may want to just drop down because there's stops under here. It may be targeting that. But if it's going to respect and stay bullish, it's going to respect in these bearish candles right here. We'll just wait and watch. We have about 15 more minutes till news, so I'm going to watch and see what happens with the news. And yeah, then we'll just see what's going on. Dollar has again traded into this volume imbalance and has fallen back. So be interested to see if price can hold this level right here on that 1 hour order block. It could come up back up into here and then start moving lower. Pound, euro. Again, remember what I said on the euro dollar. This is the 4 hour breaker under here. It's respecting it, just like it has multiple other times. I don't know that it will continue to do that this time, but that's where we're looking. So I'm waiting on euro. If I was going to get it long, I'm not, because I'm done for the day on the 10K account. Then you would be looking for price to come up, respect bearish PD arrays, create some displacement, find a fair value gap in that you could then run up into these highs, and that. Don't know if that's going to happen. That's what we're watching. Currently watching this US30 trade I'm in on another 100K challenge. Trying to target initially this buy side liquidity, and where's my 73950? My TP on this is 739.5. So where I'm targeting this specific level, I would pass this 100K, phase one of this 100K challenge on the funded trader if it gets that high. It's got some work to do because you got all of this mess that price just doesn't want to work with at all. It doesn't really, it just bounces around. So it's got some work to do to get through this, the 3 a.m. Is that right? Yeah. This 3 a.m. bullish candle from London. If it's going to come up here, it's got to deal with that. And you've got some, currently this would be a bearish order block. If this is going to respect bearish order flow, you could expect price to come back up potentially to this level, into this fair value gap and this order block, and then continue down. So if it gets, let's see, what am I at? Where would my break even? If I'm just going to set up a 1.5 here. So 1.5 would be just above that swing high before I would move to break even. But I'm probably, if price can get up into halfway through, like fill in that fair value gap, it's just under 1-to-1 for me. Is that right? Let me see where my stop is. So my stop is up here. Oh, that's way better. So 1.5 would basically be inside that order block. So if I can get up inside that order block, I'd go to break even here, a risk-free trade, and then hopefully see price continue to run up here into this buy side, these buy side liquidity targets. So it's moving kind of nice right now, but that doesn't mean anything. We're early into the 8 o'clock hour. At 8 in 15 minutes, we have news. Maybe that's what pushes it up. I don't know. We'll wait and see. I will be ready to manage it as we go because I got in before the news hit. There's some headlines here. What do these headlines say? Dow futures fall as Disney drags. U.S. equity futures treasury yields mixed early on dollar strength. Futures edge higher on inflation cheer. Disney slides. Well, it's making a big, nice run up here. So that's cool. Again, my break-even point is 1.5. And we're about to get there. So it's a little bit higher. We're into that order block. We're into this fair value gap. We're going to see what happens with price. What's going to happen? Are we going to respect this order block? Are we going to respect this fair value gap? Don't know. Reached up into it. It's now having a reaction off of that order block and off of that fair value gap. We need price to move through this fair value gap and not respect that order block. But currently, it has completely respected that order block. And we did not get to our 1.5. I did say if price got up into that it didn't even finish filling in that fair value gap. So kind of sucks. Now it's falling back pretty aggressively. We'll wait and see. We've got about 10 minutes till this red folder news pops out, and we'll see what happens. 30-minute time frame. Here's what we're looking at. Again, same. You got a bullish order block right here. You've got fair value gaps. And there's one more fair value gap up here. But price is currently falling away pretty hard on the 15-minute. You can see this run low, clear out liquidity into a discount. It reached into this 15-minute fair value gap. And now it's made this big run, aggressive run up, and now it's immediately pulling back. Reached right up into that fair value gap and that 5-minute order block, which is also a breaker. So you had this little run lower, run higher, breaking through. So I don't know, not feeling great about it right now. Such an aggressive move up and reaction off of that order block makes me think that price is going to respect this fair value gap in this order block. Ran right up into it and immediately reacted off of it. So I'm going to, it's back at my, oh, where's my entry? My entry is way higher. 33,477. Wait, how did I get that so wrong? There's my entry. That's my entry. So we're back at entry. So I technically then 1.5 would still be up here. Yep. We'll see what happens when our news comes out. This is the London high. Dollar. Again, you remember you want to see price respect this. If it's going to stay lower and create a move back down, you want to see price respect order flow. And so this, you want to see this become a bullish, a bearish order block. So you would want to see price respect this 1 hour up close candle right here. Continue to respect that. Got about 8 minutes until the news comes out. Just reading price. Watching this US30 position that I'm in, trying to target some buy side liquidity based on 4 hour sell side liquidity grab, displacement higher. Yesterday we filled in the imbalance on that displacement higher. We now have a displacement inside of here that I was targeting as a discount from this swing leg. And we're hoping price will cooperate. Currently it's respecting this 1 hour order block and this fair value gap right here. So we've got some work to do for this trade to work out in our favor. Oh, goodness. 6 minutes until we get some news. We're looking for this news right here, which PPI month over month. We'll see what that does and if it moves price at all. What's the time delay on this? So if I look at my phone here, 24, about 20-second delay it looks like. Euro dollar's moving higher. Well, it's just stalling around waiting for news, so nothing happening. US30 sitting at entry after respecting that order block and that fair value gap. Five minutes, and we're gonna watch and wait. Again, no trades taken today on my 10K to max funding challenge because the trade that I took yesterday that I was triggered in on basically floated around a little in profit, a little in drawdown around break even, and then during the London session overnight, it took me out, took the L. And we lost, I had risked 2% on that. We lost our 2%. And so my daily loss limit for today was hit because that trade took a loss. So I cannot take any more trades on the 10K max funded account. The daily drawdown for the actual challenge is 5%, but my personal rules for this 10K to max funded challenge is if you risk, I can only lose 2% on a day. I'm allowed to risk up to 2% per trade. I could have broken that up into multiple trades, but I decided I liked that setup. After CPI yesterday, it just didn't play out and work out in my favor. And so we will wait until tomorrow, and we'll look for another opportunity as the week closes out to see if we can get a setup that allows us a 1 to 2 risk reward opportunity. Currently, I have another 100K challenge working on the funded trader. This is phase 1. I was monitoring this setup on the US30. I do think buy side liquidity is going to get tapped into, and hopefully the news pushes us over there. I said before this candle formed, just as this candle opened, I said price is going to have to get up above this bullish candle and these fair value gaps. Ran hard up into it in the first 15 minutes or so, tagged that order block and that fair value gap, and aggressively fell away. So I'm not feeling super confident about it right now. I'm not like upset about it at all either. Oh, ICT's tweeting. Whatever. See what the goat says. You gotta go pay attention. Volatility coming in 2 minutes. What's going to happen? I'll be ready to move to break even if we get an aggressive run up here, back up into that order block. We'll just wait and see. I don't know why I didn't put my stop at the bottom of that. It's basically just below that fair value gap. Price can wick through fair value gaps and still respect them overall. Not ideal on my stop placement there. admittedly. You'd really probably want to see that stop placement at this body low or this wick low, but calling it out right now, I'm jinxing myself. Why did I do that? Remember, this is just demo trading. We're just paper trading. The market doesn't even know I'm in. It doesn't even know I'm participating in any of this. I'm just reading tape, using my analysis, and talking you through as price books. Oh, we got 10 seconds. Here comes the news. We will see what happens. Volatility incoming. PPI, month-over-month data. Here it comes. Getting some movement. Euro dollar. What do the numbers say? Oh, we came in pretty hot on that. Just below expectations, but way higher than the previous PPI. Not getting a super aggressive reaction in the markets off of that. Showing some initial desire to move up on that news. It's like digesting it. What do we want to see? What do we want to do? Euro and pound are running higher. So again, if this hourly close, we can get a strong close back inside of here, respect some kind of low, get a break of structure. In a fair value gap, you could look at going long. The dollar is reacting negatively to the PPI news. Well, at least initially, it's dropping down. You can see it's got a lot of room from overnight in this London move to maybe retrace back down into. So yeah, just watch and wait. Nothing's really happening. US30 is, the market is not wanting to do anything. It's just sitting around my break even. It's creating a bearish order flow currently. On the 5-minute time frame, this is pretty much as low as I go. You can see we've had a break of structure on that. I wonder how I can. Had a break of structure right here on this candle, came back down into it. It's in this fair value gap. Price needs to hold right in here, or else you're going to see this give up, and then you're going to see that give up and the stop hit. So you're going to want to see price start moving up off of this area pretty rapidly. You don't want to see price meander around that area. You want to see it start moving away, because you had a break of structure, you left a fair value gap and a volume imbalance, which it's tapped into. You want to see price move away from here, but we don't know if it's going to. It's a 5-minute time frame. Set that order back here. Got triggered in at 7:15, and now we're watching it. We had a run up, a respected higher time frame PD raise, and this is a 4-hour order block. I'm sorry, a 4-hour. Nope, this is a 1-hour fair value gap back into a discount. Now, when the dollar's dropping, typically that's a risk-off scenario for the markets for ES, NAS, and US30, and you would expect them to go higher as the dollar's dropping. You don't want to see them. So you can see NAS running higher. You can see S&P ran higher and is pulling back. NAS took out highs. S&P did not take out the highs. US30 did not take out the highs. So that is bearish SMT overall on the 1 hour. So that means the ES and US30 are weak, and the NAS took out sell side right here. See that? This is SMT. So NAS took out these highs. The 5 a.m. high, the S&P did not, this is the 5 a.m. high, could not get up high enough, and the US30, the 5 a.m. high is actually a 3 a.m. high, 5 a.m. high. It couldn't get up anywhere close to that. So that would mean probably overall you're on the wrong side of the market right now because of the SMT. Dollar's pulling back, Euro's pulling back, gold, pound's pulling back. So it looks like we're gonna get a run on for S&P. You're looking at this fair value gap right here as a potential run. NAS, you got these lows. US30 is here. Do I cut this? Do I cut this? I think I cut this. I think I need to cut it. It did not. 15-minute time frame. If it breaks that low, probably gonna cut. Tried to run high, couldn't do it. Ran into that order block. Respected it. Which is probably in OTE for your London. Optimal trade entry. Ran right back up. So your target would be here and here if you're using an optimal trade entry, which I did not. London optimal trade entry from the London session. So you had your London high to the low before the market open. Coming back to the entry level here on my US30 position. Not, you know, this is the whole emotional and psychological aspect of this. What do? You keep holding it. You've seen price respect higher time frame bearish PD arrays while you're in a buy. You've seen SMT on the NAS against the other two indices. NAS took out a higher high and S&P and made a higher high. S&P and US30 did not make a higher high, which would lead you to believe that the market overall is going to be weak and that the NAS was just running stops so that it could move lower. So what should we do? Just let it play out. You made your analysis. You put your stop in a poor place. You can see on the 5-minute time frame, we did not respect any of this, and well, actually, currently didn't respect that volume imbalance. If we get a close below that right there, I would suspect our stop is in danger, getting hit. And OTE back up in. So there's a lot of analysis here that says I'm on the wrong side of the market. the SMT, the OTE delivery, respecting of the order block and the fair value gap. This 1 hour fair value gap is kind of like it's my firewall, right? It's like my stop is below that 1 hour fair value gap that's in a discount of the overall move up. We're at 50% of this leg right here. Currently price is respecting it. So I don't know. Not feeling great about this. I would need to see. I would need to see a stronger bullish close on this next candle. Or in the next 19 minutes, and I don't think we're going to get it. Dow futures fall 30 minutes ago. Disney's dragging us down. So will it shrug off some of that Disney drag? Is the dollar still falling? Euro climbing back up. So we're moving back up into this. Remember, you had a run on liquidity and a run lower with displacement. So this is a 4-hour breaker. So what's price going to do right here? Don't know. Watch and wait. Watch and wait. NAS is falling. S&P's falling. US30's falling. What's Bitcoin doing? Massive spike under relative equal lows. Looks bearish. A lot of sell side liquidity under here. Is Bitcoin about to did it top out here, rolling over? If it rolls over, it's got some room to run, folks. Yeah, I don't like where we're at. Don't like it at all. I am excited about this 5K to 10. I'm sorry, this 10K to max funding challenge. We're using Bespoke funding as our prop firm of choice for this challenge. And they have no time limit. They have a 5% max daily loss. They have an 8% overall account drawdown. And they have 14 days to your first payout after you're funded. At least on they were running a discount or promotion on that. So I'm not sure how long it's going to take. I'm working on a product that I'm going to be putting out into the marketplace here, hopefully within the next month. It's going to show people exactly how you can use prop firms to ditch your day job, trade your way to freedom. And it's going to show you, it's going to hopefully help show people that it is very doable to take a small amount, an initial investment, in this case, right at $100, to buy a 10K challenge and use that challenge to snowball your way into max funding, which would allow you, with a very small, like 3 to 5% a month, you can quit your day job. So I've got a few more chapters to develop. I'm going to have a whole psychology section in there, risk management. I lay out the exact plan of the rules that you need to follow, a little bit of a strategy. The strategy is going to be different depending on how you want to trade. Now I'm going to, eventually offer people to get in, and I can teach them the strategy that I use, but this is just going to be something to help inspire people to get into trading. Use prop firms to expand your earning income. Wealthy people use other people's money to get rich. They don't use their own money. They put their own money and use it for what they want to live on, and they use other people's money to get rich. So trading as your own business, you can't go to a bank and get a loan, but you can go to a prop firm, show them that you know what you're doing, and they will give you funds, and then you can just keep snowballing that. So we're not looking great on this US30 trade. We're coming into the 9 o'clock hour. News didn't really give us a huge amount of volatility, but it did kind of solidify where the market wants to go, in my opinion, which is going to be bullish dollar and bearish foreigns and indices for today. So we're currently creating another 30-hour order block. So it respected that order block, came back up into a premium, into a fair value gap. It's fallen away. We're now creating another 30-minute order block. If it gets a close below here, then you would expect price to, if it's going to remain bearish, to respect that bullish candle right there and use that to target these lows, this fair value gap here, and eventually this low again. On the 4-hour time frame, again, this was framed. Why did I want to take this position? Well, because you had this right here. You had this 4-hour move up, aggressive move lower to sweep liquidity, all the liquidity under here. Close in some fair value gaps, respected this order block right here. Then you had displacement up pretty high. Okay. You had a break of structure, fair value gap. You had yesterday a move lower on news to fill in this fair value gap. And then you wanted to see higher. This move inside of here back up created this fair value gap. So price doesn't need to come back down here. It's already grabbed liquidity. Price doesn't need to come back down here because it's already grabbed liquidity. We're using this fair value gap as we want to see it act as support. We don't want to see a close below there. If it does, we're wrong. We were on the wrong side of the market. And there are signs pointing to that fact. We had an OTE from the London session. We had a order block and a fair value gap, and price aggressively ran up into it, respected it, and aggressively fell away. With news, we didn't get a ton of volatility, but evidently Disney sucks right now and is dragging the market down. And so we're watching US30 fall. We're watching NAS after having grabbed highs fall. We're watching the S&P fall as well. So you have some sell side liquidity here. Relative equal lows on NAS down there, right here. This low, those are relative equal lows, and you have a fair value gap. You have a fair value gap here. And the dollar's still showing a little bit of weakness from it's not recovered all the way down from London. Hasn't even gotten to the OTE section. Dollar still has room to fall if it wants to go higher. It could reverse anywhere in here and start going higher. Yeah, not looking great for our US30 trade. Oh, well. That's the way it goes when you're trading. 50% win rate, folks. That's what we're shooting for. I am, what am I doing? What was I looking at? Oh, yeah. I have so all these prop firms now have free competitions, trading competitions that you can join at the beginning of each month. And the traders that reach the highest profit percentage return end up winning free account challenges and some cash even. I'm doing one with my funded FX. It's up 2.5%, which is way off the leaders. The leaders are like 60% or 70%. It's crazy. You can only use 5 lots max per position or per trade. No. Per open positions, a total of 5 lots. So you can only have 5 lots open at any one time. So we're going to watch. We've got 8 minutes until the 9 o'clock hour, and we're probably going to see this get tapped out here, I would imagine. It looks pretty heavy to the downside to me. And that trade's going to take an L. Oops. Trade. So I can open a position on my competition account that's on the opposite side of this funded challenge and try to capitalize on some movement down. If I am going to take this L, then this free competition account, which I have no skin in the game, there is no money invested, there's no loss, it's purely just fun. So if I'm going to take an L on this, I can take a win. This competition account. It goes through the end of May, and I think the top 30 receive either free challenges or prizes or cash or something. I don't know. I have to go to my funded FX. Feel free to go look at that if you want. Euro seems to be respecting bearish order flow. Pound as well. Looks like they may want to dig lower into sell side liquidity into this breaker. See if it would see what happens and see if it respects it. We have some time. I think the dollar is going to make a run above, maybe back up into here to close out the week, and then the rest of May, who knows what's going to happen. We'll just watch and wait. You can see now that we are halfway through that 1 hour fair value gap. We're going to see how if price respects that fair value gap at all. have to get off here in about 15 minutes. We'll wait for the open here on the 9 o'clock hour. I don't think we have any more news. We have news tomorrow at 10, Michigan consumer sentiment. I don't know what that's going to do to volatility, but it does appear the markets want to be heavy. We are in the seasonality wherein markets tend to go down throughout the summer. So maybe we've hit that seasonality and the switch is going to start rolling over. Dollar will start gaining some strength and the markets will start falling and trending down. I'm all for trending. Just give me a direction, give me a clear bias, give me price delivery, order flow that it's respecting, and I can get in and out. The sideways choppiness is driving me crazy. All right, so you can see dollars pulling back, showing some strength now. I would expect gold to show weakness and pound and euro to continue to show weakness throughout the rest of the day. We'll see what happens on the euro here on this 4-hour breaker. We'll see if it respects it, how deep it wants to dig into this sell side liquidity. And then if it shows any desire to want to return into this range, then we would expect bullish price action. Same on the pound. We've dug into this sell side liquidity. Does it want to go deeper before it makes a deeper stab up into this weekly imbalance? Don't know. Currently it ran up there and fell away. I think 127 is the minimum it's going to get to, so we still have some upside there. Euro obviously still has this weekly volume imbalance. Is the euro going to catch up with the pound? I don't think we're going to find out today. This US30 trade is crap. Absolute crap. Maybe we get a turnaround. We have an hour left in this 4-hour candle. Maybe we get a pullback at the 9 o'clock hour and the market opens and wants to pull back up a little higher at 9:30, or it just completely craps the bed and wipes us out, which is apparently what it's going to do. Nice thing is my competition account is almost 1% in profit already while this thing's dropping. That's the nice thing about having different accounts. You don't have to feel bad because you see drawdown on one, but you're like, ooh, but this one's doing really well. I did good. It's all psychological. Means nothing. Means absolutely nothing. It all means something. Don't fool yourself. I don't think we had anything but uh, 2 minutes, and we are closing super bearish. We've left a fair value gap, so potentially you could see respect of this, a run up into this fair value gap up here on the euro if we're going to go lower. Pound does not give us anything on the 4-hour. 1 hour is already closed in that fair value gap. You could expect it's respected this, so you would expect price to want to turn around. US30, we already know my pain with US30. I should have taken the sell down into that entry, at least made a little bit of money, but I did not. Respected that. As soon as I saw the aggressive pullback, probably should have gotten out, especially when I realized it was an OTE and there was SMT with NAS and the S&P 500, but I did not. And so now we've got a minute for this to close out. Potentially you could see the 9 o'clock hour open and come back up, maybe retest this fair value gap as an inverted fair value gap now. is what it did here. BPR balanced all that out before it decides just to drop to the depths of hell. About 20 more seconds, and we'll watch maybe like the first 5 minutes of this, and then I got to get out of here. Been on for over 2 hours already. Have done plenty of analysis and read price live and broken it down. All right, here we go. Start of the 9 and immediately drops lower. It is at the bottom of the 1 hour fair value gap. What's it gonna do? My guess is it's gonna completely tap me out and take this account to massive drawdown. Well, not massive. In a drawdown. Drawdown is drawdown. Any drawdown sucks. But all right, it's broken the bottom of that 1 hour fair value gap in the first 5 minutes. It's aggressively now running lower. It sees my stop and it wants to eat it. It wants to eat it. And it's going to. Nas dropping lower, S&P dropping lower. You can see it just opened and dropped, no upper wick. So maybe we get putting in a bottom wick here before it's probably gonna hit my stop and then turn around and retrace back up to at least my entry. And I had even talked about when I was, I remember thinking about this last night, thinking, oh man, this is the, you should have put your entry right here at the bottom of that fair value gap and put your stop down here. But we are officially getting tapped out. Don't just toy with me, man. Just smash through it already. Should I just stop below there, the bare minimum? And we are still not tapped out. I'm watching it over there on my MT4. Come on. Let's capture this live. Take this loss live. Let's go. It's not a complete loss because I'm up 2.5% already on the competition account. Don't do this. Don't do this. Come on. Wipe me out. Come on. Let's go. Get it done with. Dollar's climbing. We should put weight on the indices. Nas has got some weight. S&P has taken out sell side. US30. Here we go. Here we go. Let's go. Let's go. And we're out. There it is. Took an L. Live on the stream. And it's okay. Nobody died. We just took an L. We're in drawdown. It's fine. All right, y'all. So, I've given you my analysis for the day. We've streamed for 2 hours. I've told you how price should react at certain levels, and it has. I was on the wrong side of the market, but I'm up 3% on the my funded FX competition challenge already. That's cool because I basically hedged against my other position there. So we'll hold on to that for a little bit, see if it'll target some of these lows down here. Yeah, 3% already on that, so way to go. Good job. Too bad that's not my actual challenge account. All right, guys. We will be back again tomorrow morning. We will be here at 7 a.m. Eastern Standard Time. So